to the RationalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. I'm actually sending little PMs to people. Actually, I sent you a PM. I beat you to it. Just as we are going to get the video going here, and I'm sure Chris is like, shut up, Jesus, what are you doing? Anyway, welcome back to the Frivolity, everyone. It is Friday, TGIF. Actually started a couple minutes late. My apologies. But here we are, 11th of August, so steamrolling our way through the dog days of summer. And if I understand correctly, temperature is supposed to heat up a bit here through August in my local neck of the woods. We've actually had a pretty nice, in my opinion, actually a pretty calm summer. But anyway. Hearts go out, of course, to all those people suffering from natural disasters. The latest one du jour, which is quite shocking, of course, is what's going over on in Hawaii. And we have one of our instructors, our level 3, level 4 instructor, Zach, our options guru, spread trader aficionado, and all around nice guy. He lives over there in Hawaii, so everybody should maybe just have a calm moment of prayer for good people of Hawaii right now. Market wise, I think the breadth indicator pretty much summarizes exactly what's going on in the market. I tell you, now that we've got a lot of the kinks sort of ironed out, this breadth indicator should be like literally become like industry standard. A lot of people use things like advanced decline line. And a number of stocks above moving averages versus below. This breadth indicator works on my proprietary, because frankly speaking, I've never seen it anywhere else in the market, measure of technical strength weakness in an asset, the Delacour Index. Why Delacour? Delacour is my middle name. I'm actually Brian Delacour the 11th, if I'm not mistaken. Absolutely crazy title there for you. That goes back hundreds of years, but it doesn't really mean much. That's what this is. This is a cumulative technical reading over 3 different time frames and about 45 different technical indicators, and then my preferred moving average relationship on them. And I think it works absolutely excellently as a sort of technical health measure. You could probably do it just with something as simple as an RSI, but this also combines multiple time frames. RSI happens to be one of the ingredients in this technical indicator. And actually, I even teach you in the level 2 program how to build a DI indicator on sites like TradingView. TradingView actually is enough programming capability with their Pine script that you can actually even build it yourself. And it's a fantastic tool to use to help you. And of course, this is everything that you probably hear me talking about in the marketplace. You have beautiful structural failures in indicators. And of course, that's if our charts will agree with us. It's very tough to move these charts around. You can see it always wants to go back to where it wants to be anyway. Nice moving average breakdowns, M's in the indicators. And then, of course, everybody should know my favorite single chart pattern and yours. And it should be. If it isn't, maybe you ought to consider adding it to your toolbox. The outside downside key reversal. Rah, look at me. I'm a bear. Down I go. Working very nicely. And then, as I said, the breadth indicator, which you will not find anywhere, is basically I don't know what you say, a cumulative reading of like all of these DI readings right across the stock market with, of course, my proprietary moving average system. And it works just beautifully to tell you sort of like what's the tide. That's the most important thing you can take away from this breadth indicator is this is a measure of the tide. Is the tide moving in? Is the tide moving out? And they always say a rising tide lifts all boats, and a falling tide sinks all boats. So you can imagine what the boats are thinking right now. Spaghetti-o. Also, too, if we use this breadth indicator in combination with a histogram measurement of sort of bullish percentage, in essence, this is just going to give you sort of the raw sort of reading on both the short term and a medium term of sort of extremes in the market. Think bullish percentage index. If any of you use things like McClellan oscillators, the summation index, that's another really good reference. You guys probably have no idea what I'm talking about. You want to go pause the video while you're watching afterward and Google those terms. Try and give yourself a little bit of backdrop to understand what I'm talking about. That's cool. But the point here is that when we see things like country funds all go heavily oversold, and we see things like the S&P 500 go heavily oversold, you can see even on a medium-term basis, we're not really that oversold yet. Whenever we get those kind of massive readings to the downside or the upside, that's a long-term cyclical shift in the marketplace. And I don't think we're really there just yet. It is interesting to see country funds now at minus 70 on the medium term, minus 60 on the short term. So if we can get this down into below 80, which is basically technically oversold, then we're probably near some sort of global turn in sentiment. You know, the simple adage is you should be buying when everybody else is crying. And this would be a visual representation. If you see both short and medium term dramatically oversold, then it means everybody in the world's crying and bitching about how shitty the market is and everything's down. And ironically enough, that's actually when we want to get bullish. And actually, you even heard Julian in his public presentation yesterday talking about sentiment. If he sees that the market's too bullish or too bearish, he actually wants to think the exact opposite direction. And frankly speaking, that's not a bad way to look at the market. So with that said, of course, somebody's calling me here. Terrible timing. I'll put you away. Right now, interestingly enough, the currencies are looking pretty oversold. Did notice that the US dollar is pressing higher here. And of course, you know, the currencies lead everything. And if all of the currencies are down, which by definition means, of course, then that the, where should we have? I think we have this over here. The US dollar index must be up, and up she goes. In fact, actually, I might even argue that there is a B, C, D pattern working. Looks like we want to head up top here. We could even, the fact that this YW has been confirmed, we could even do crazy things like Faggenbaums. Which would make sense, right? Because the bot, you can see actually a very well-defined double bottom right off that bot entry level. Huge stab against the lows. This is why it's important to have 3 higher lows to work with the bot. So, you know, there was this one dip, then that dip, then that dip. And notice they cleaned out these guys. They cleaned out these guys. They could not clean out these guys. That's why I like to have that 3 higher lows. So anyway, point here is they reversed it back up. A bot objective would be 104 and change. And interesting how Faggenbaum off of this YW that's confirmed here now. Interesting how it is lining up against an 877. And probably, oh yeah, what a big surprise. It's basically just asking, are we going to go up and bust out these old highs? And the old adage, you know, you're going to short against highs, you're going to buy against lows. It would make sense that the market's moving one directionally right now. And as soon as we get into this level, you should actually see a lot of professional futures traders and those kind of people step up and start to get active in the market, which is going to inject chaos into price action. Hence the term chaos theory. It's actually really cool how all this stuff, if you actually break the pieces down, actually everything makes sense. It's quite remarkable. But you know, what ends up happening is people who don't really know the full story try to piece all this stuff together and they can't quite put it together. And it's beautiful to watch some of the, you know, like guys that like I think My line of 2023 is going to be inverted hammers. And listening to, like somebody would call this, wow, that's an inverted shooting star. Anyway, inside joke, I suppose. Brian loves to laugh at all the newly sort of deemed experts on social media and their funny language they use. Anyway, here nor there. Point here is US dollars pointing up here. And I hate to say it, but that actually supports what we're seeing out of the breadth indicator. That this basically is a risk off bet. And I get the impression that US dollars rallying up here. And more importantly, I think the euro's getting its nose punched here. Let's go see what that euro chart looks like. The euro, there it is. Actually enjoying a bit of a counter trend rally here as we speak. There's the daily chart on the euro. It has come off a chunk. That is that recent US dollar rally. I don't know whether I would really, I mean, there certainly wouldn't be a trade for me to do right here. And if anything, actually, it looks to me like this is probably the foggy boggy that's at work. So boom, 2.618 ran into traffic, 4.669 ran into traffic. And actually, this is a really good lesson that often when you see these 4669s get traded to, market's going to ask, well, do I really want to go up higher? And where's 87? If it did want to go up higher, well, then 877. Oh, what a surprise. It's going to take us to kiss the underside of that trend line. But what often happens is we have to come back down to 2.618 and ask ourselves, well, do we really want to be a bull? And notice, look at the battle that's going on here. So probably need to wait for this to resolve. I suppose if you start seeing candle prints, nice closes above this level, then looks like the bull's back in charge. And we could probably start doing foggy buggies to the upside. Something like that. Anyway, interesting. 2.618 is just going to be simply a test of that high, which makes sense. So, not really the purpose of today to talk about euro, but I did want to mention that the US dollar. Now, why? And that's really the whole purpose of this daily brief video offering that we do. Try and sort of connect the price charts with the actual news that's going on in the market, to try and explain what the heck is going on in the world. So why would the US dollar be moving higher? Demonstrator of best practices, right? I forced myself to go to bed pretty early last night, was up fairly early, saw the PPI print this morning. And I hate to say it, the producer prices as a function of just simply the cost of doing business, still pretty strong. Services sector was up 0.5%. Oh, yuck. Annualized, that's like 6% inflation. Uh-oh, don't like that. Year on year, the PPI increased 0.8%. Uh-oh, that's a pretty ugly number. Annualized. I mean, I don't know whether, I guess that's year over year. That's not month over month. But, if you annualize that kind of number, that would be like 8%. And the market was looking for 0.7. So these numbers are still coming in awfully strong. The reason, half of the reason why the Fed likes to follow what they call the core rate and things like the personal consumption expenditure indexes, which came in at like 4.5% recently. Well, that's just purely a function of the fact that they don't include food and energy prices in like core rates and things like PCE. So the headline number, just what's the producer price index for the month of July? It's still very strong, and unfortunately, energy prices have been going up quite a bit recently. So it's probably going to remain firm. And also, too, I think I saw. The grain markets are back and forth. Wheat's a bit firmer. Things like soybeans are coming off. And then also, too, I noticed that natural gas actually jumped up quite a bit there earlier in the week, but it's calming down a little bit here into the end of the week. So anyway, we'll see how that goes. Other news, as you can see, market really didn't like that PPI coming out of the gate, but at the same time, too, I still think that the U.S. economy is fairly strong. Everybody's worried about, oh, is the U.S. economy going to go into recession? And frankly speaking, I don't see it. As a function of U.S. economy and U.S. economic strength, um, we had Michigan consumer sentiment numbers come out today. It's obviously a pretty important number, and they're still coming in pretty firm. I mean, it's certainly not breaking down. How's the consumer feeling? You could actually just simply use this chart as how's Joe Sixpack feeling these days? Joe Sixpack, the higher highs and higher lows defines a bull. I mean, we're certainly not at like, bull market kind of phase. Usually when the consumer, how do we say this? Usually when the sentiment indicator is up, above 90, pressing up against 100, that's usually when we're near some sort of top of the market. You got to be a bit worried about things getting maybe a little too optimistic. So I might make the argument that, well, and as Andre say, people are struggling in the U.S. I would say that not as much as elsewhere in the world. I think that the U.S. generally the U.S. consumer is doing okay. And interestingly enough, like in my nutso insano world, nothing is broken here yet. And so that means that these central planners, these central bankers and stuff, they can't be done raising interest rates. I think they might go on pause here a little bit, but we've said this repeatedly that the Fed will have to continue raising interest rates until they actually break something. I don't think it comes out of the United States, but that's been my argument all along. And actually seeing this kind of data, this is actually going to give fuel to the central planners that, hey, we can still continue to raise interest rates and it's not that big of a deal. So anyway, we'll see how that goes. I do understand that actually probably, and I haven't been able to replicate it yet, which is a bit of a piss off. But I have been trying to rebuild my Fed spread analysis here. This is sort of the market favorite study of late, along with the Fed funds futures, which is this guy here, and their relationship. Really, simply put, they'll be done raising interest rates when we start seeing W's here. So there's no W's here. And usually what has to happen is actually the market goes sideways for a very long period of time. So that's kind of why I don't think that the Fed's really going to have to raise interest rates dramatically here. That PPI number is a little bit shocking, that 8.78% annualized rate. But the PCE has been coming in around 4%, 4.5%. And of course, they've got Fed funds here up around 5%, 5 and change. So they do have interest rates. And I remember vividly back here, Mr. Druckenmiller specifically said that they won't stop raising interest rates until they actually have the Fed funds well above the actual inflation rate. So they've done that. And Mr. Powell has talked recently about how he believes that the interest rates now are constrictive. So I wouldn't be surprised if they just park rates here for a while. But the stock market and risk takers and all that, they really want to see interest rates go down. As soon as we start hearing that, yes, they're done raising rates, they actually have to start lowering rates, and maybe they have to lower them in a panic. Well, that's usually when things like venture caps start rocking and rolling. And the great part about it is you all know this. About how many months ahead of the halving event should we expect crypto and Bitcoin prices to bottom? You all know the answer to this. You also all know exactly when the halving event is coming in. So as a result, you could actually pretty much predict when this thing should probably stop going down, which means interest rates are heading higher, and it should start flatlining and maybe even start turning back up. And hint, 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 it's right about here. So we're getting close. That's a good sign. Okay, so headlines here today. Inflationary pressures are still pretty high, and I don't see the Fed rate lowering interest rates anytime soon. Over the next 6 months, yeah, maybe something. All right, thank you, sir. Same time, we've got um, consumers still feeling relatively positive. I mean, you can see they've done a lot of damage to the consumer over the past year and a half, no doubt about it. And if anything, this is what Mr. Powell needs to see, this downward stuff. If anything, seeing the consumer feeling a bit more optimistic and coming back, it gives Mr. Powell more room to step on the gas if he has to. I don't think he will, but it's just Brian's opinion. Let's see. I don't think there was really anything else that I really wanted to talk about econ wise with you guys today, but just try and understand why the US dollar is as firm as it is. Well, I don't think interest rates are going down anytime soon. And at the same time, too, I mean, it's just an absolute shit show over there in China. And I'm continually astounded by the fact that things like Thailand are still as firm as they are. It doesn't make any sense to me at all. But anyway, if China does tip over the way that it is, I would expect the whole Asian market to tip over as well. But anyway, it's always fun to listen to Julian's report on how things are going on the front lines there over in Asia. Yeah, so there's your report. We've been talking recently about how the NASDAQ has been leading the market lower, and my general message to everybody is that usually in these corrections, the market darlings, whoever the market thinks is a darling, usually they break last. And then once they go into full meltdown mode and they start coming off in earnest, of course, the media is going to paint this as it's the end of the world. And oh my God, you're probably going to hear the NASDAQ itself has a very pretty bearish pattern working right now. I tweeted this out a week or two ago. I don't see any reason to change any thinking here whatsoever. We got a whole bunch of downside reasons and locations to look for price to come back to. I tweeted this out. So please follow me on Twitter if you want that image. But there's tons of technical reasons to justify this market working its way back down. And you can see that just even overnight, we had a really interesting event yesterday. And actually, this is a concept that we teach in our level 2 program. How do you trade with moving averages? This happens a lot. These are my proprietary. You're not going to see anybody else in the market that uses these particular moving averages. I don't think I'd say it's proprietary, but it's just very definitely Brian. So 13 EMA across 30 SMA, that's a pretty big sell signal. This is a daily chart, so it's not a run for the hills sell signal. It's more of, wow, this is a double top. And as I showed you on that previous chart, this market has come way too far, way too fast. It just needs to clean itself up. All of TRIers know that just at any given point in time whatsoever, we should always expect 38.2 retracements. Huge gap on the charts there at that level. It's also a Feigenbaum chaos level. And I wouldn't even be surprised by the time we actually do trade down to this, the 200 SMA works its way up and that access support as well. So, but this was really cool because this is an absolute perfect demonstration of a concept that we teach our level 2ers and how to use moving averages. 9 times out of 10, when the moving average actually crosses, it usually means that there's been a lot of technical damage done for the fast moving average. And we're just now getting to the point where actually we're starting to do some serious technical damage to the medium-term moving averages. But usually on that event, there's usually a check of this moving average relationship. And that is exactly what happened yesterday. I mean, this is the definition of a Wyckoff check if there ever was one. It was absolutely perfect. They also brought the market up. It's interesting how they didn't fill the gap in with a candle body. But I often see these days that they'll just fill it in with a wick. and not a tail. That's a wick. And then they'll just continue it lower. So yesterday was a oh god, and maybe I'll just better talk about this in the after party, because yesterday was just the most absolute textbook example of a fade trade setup yesterday in the stock market. I mean, it was just absolutely textbook. It's ridiculous how cliche it was. Um, so this is your Nasdaq. I mean, it's interesting how my negative commentary about Allen these days has actually elicited a lot of response from people that, oh, you just are jealous. He's so rich and successful. Yeah, no, folks. I mean, I have personal issues with regard to the way that he uses his autism diagnosis. And anybody who knows me knows that I live a very intense life with autism. So that's actually my primary beef with the guy. But regardless of that, I don't care whether you like him or hate him. It doesn't matter to me. What you really need to take away from this conversation of late, and this is why I am talking about it so much, is that is the most beautiful, absolutely beautiful example of a weekly outside downside key reversal. You are not going to find a better example of that. And I want to see something really cool. Like this is, I don't even think it's a good idea to get into the business of shorting Allen, but this was a really, really good setup here. So, I mean, it was at an ABCD PRZ. This is a trade level. If you like harmonics, I think a guy's named Scott Carney. And you don't hear too much about him anymore. I don't know what happened to him. Anyway, he was Mr. Harmonics for a long while, but harmonics goes way back, way before him. Outside downside key reversals. I mean, there was beautiful bearish divergences and indicators, and yada yada yada. The trade's just working wonderfully. You want to see another example, and actually probably a much better short trade in the auto industry. We had General Motors spit up a very similar pattern in the key reversal arena. And look how this thing has just shit the bed. And actually, our advanced traders, Zach teaching spread trades, we had it. This is actually a really good example where we had a spread trade that we were going to buy the 36 put, and then we were going to write the 34 put. And the total cost on the trade was about 30-40 cents. And this option has actually now hit its maximum profit potential. Because what would happen here is you buy the put where the strike price, and really probably the best way to show this, reason why we picked that level is you could do chaos theory off of this top, and boom. You want to buy the put that's near this 2.618 chaos level, and you want to write the put that's near this 4.669. I might actually argue that this is getting pretty close to being done here, but it's just a beautiful example that the spread was like, I don't know, I think it was about 30-40 cents or something like that. I think that's what I said to you. I have it on another chart somewhere. All our SOFers that are watching this and anybody who's interested in spread trading, this is exactly the spread trade. And like you see, it's gone now, its full profit potential, which is $2. So if you buy a spread at 30 cents and it hits $2, that's a big ass home run. That's like better part of 10x. Just on a trade where the stock only moves like what, 10%, 15%? You get like 10x on your money. That's why I want you to take the level 4 spread program with Zach if you like making money from trading. And actually, over the next 6 months, I want to show you tons and tons of these examples. Because, I mean, Zach's just having a field day with his spreads. Such a great group that we have running, and they're all super smart. Francis, they're all super hip on these spread trading models now. It's great to see. All right, so there's sort of your broader market commentary. I unfortunately, this is just working its way lower. And if you want, could there be a better sales pitch for you guys to seriously consider about subscribing to our website? The key reversal signals are just killing it right now. The breadth indicator signals are just killing it right now. And the irony of it all is that the actual, just FYI for whatever it's worth, the crypto bread signal is actually bullish. And if I'm not mistaken, I think we're still up on the trade, which is so funny because, generally speaking, I wouldn't want to take a crypto bullish bread signal and an S&P 500 bearish bread signal at the same time. That's kind of asking for trouble. And yet, this is, yep, you can see and this signal was a while ago, so I can tell you it now. You can see that we're still actually technically in the money. This is where I'm long. This is where we are now based off of the last bread signal, and it's still bullish, although it might roll over here. So anyway, point of the matter here is bread signals are they're just the shit. I mean, it's just so awesome. So, okay, I'm going to leave the public rant at that. That's about a half an hour. Got tons and tons of stuff that we could review in the after party. So why don't you come on over and join us? Of course, members, you know what to do. Just don't do anything. Just kick back and let's have a fun, just chit chat about the market late on a Friday afternoon. Actually, I never even mentioned the fact that I'm watching, of course, options expiration information very closely here. And what a big surprise. Actually, I probably have it on my spreadsheet. I'll leave off this with a nice little teaser. So SPY options, what a big surprise. You can see, let's see if this is going to work. How weird. So you zoom in and yet the image gets smaller. I don't know how that works. Anyway, I was kind of hoping I could show you, but I don't know how to zoom in on this thing. Anyway, that's the 46 strike. That is basically the heaviest open interest. If they can get the market to go out above 46, then Wall Street hits a massive home run. And I suppose just to leave off this video, let's see how close we are to that 46 level. I guess that would be over here. Here's a little stock I bought yesterday. I love that level. We'll see what happens. Oh, Westport's already turned back up. And actually, this is interesting too. We got to talk about this in the after party. Somebody came in and did a panic accumulator buy on plug. So I got to show you that as well. But anyway, here's the S&P 500. We're at 445 even. And as I showed you just a moment ago, heavy open interest on the puts. Oh, that's not the right one. Where are we here? You can see that heaviest open interest. They've got 447s. Jesus, they got 48,000 in open interest there. So you tell me. Let's take a gentleman's bet and maybe put in the comments, right? Comment. Do you think it's 9:37? Put a timestamp on when you actually post in the comment. Do you think that they will be able to get this market above 447 into the close? Hint, hint, hint. I bet they do. All right, everybody. Have yourselves a great day. PMA for the win. Let's all head on over to the after party and we can review all this stuff in earnest. Have yourselves a great day. Suppose maybe we'll see you on Sunday for the Broiler Chicken Show. All the best and bye for now.